and welcome to the channel. For those of you new, my name is Dave and I work in financial services, and these videos are a mixing journey towards financial freedom, financial products, financial well-being, so you, like me, can reach your goals sometime in the future. Now let's get into this latest video. Now this latest video is all about, shall we say, your first £100,000. Now the idea of investing or creating sizable wealth or a portfolio may appear daunting or frightening at first when starting out, and it may be the most, shall we say, challenging investment goal. Now, with regard to the world of investing, it may prove to be, shall we say, the hardest decision you make. Now, your end game may well be, shall we say, to be a millionaire in later years. Consider someone, such as assets of £1 million, okay? But break it down into bite-sized chunks so it will appear achievable and attainable. The vast majority, though, believe that this figure is simply unreachable unless you have some kind of business, some kind of side hustle, or maybe an entrepreneur with numerous sources of income. So let's take a look at some action steps you can take to reach that significant milestone. Now the first action step is quite simply to take action today and to start investing. So you can improve your net worth through the accumulation of what we call wealth accumulation. Now, the world of investing may seem daunting and complex to most people because we aren't taught it in school through education, or we aren't taught it through workplace employment. So the vast majority of people don't know how to invest in stocks, shares, companies, ETF, or asset classes. Now, people ultimately make excuses when starting out, such as I don't have any spare cash to invest, I'm living paycheck to paycheck, the fees are expensive, I don't know how to get started, where do I start? Or I may need a lot of cash to invest. Now, or you may use a financial advisor who may then charge me excessive fees. But the world of investing may seem, shall we say, elitist. It may be for people who've got money. Or you may say to yourself, well, I'm going to start next week, I'm going to start next month or next year. It may well be when my financial situation improves. But the best time to start investing is today. Now, taking the first step may be the hardest part for most, and the end game may seem, shall we say, several years away or beyond your reach, but break it down into bite-sized chunks. Let's just say 1,000, 10,000, 20,000, 50,000, and set yourself a time frame of when you can reach your goals and milestones, and it will spur you on when certain targets are ultimately met. Now, when starting out, keep it simple. Invest in a simple low-cost fund, ETF, covering a specific sector, let's just say the FTSE 100, or some kind of global fund covering the whole market. It will obviously reduce your investment risk and it will create some diversification, but you can just switch off and let your investments grow. Then as your knowledge and confidence improves, then invest into single companies, specific sectors, or specific asset classes. But keep your investments simple when starting out. Now learn to create a budget and a plan of action and consider where are you going to get the funds to commit to your investing challenge. Will it be savings by current employment income? Will it be for some kind of side hustle? Will it be some kind of overtime? Will it be secondary employment? Will it be some kind of inheritance? But remember, small changes on a day-to-day basis with regard to expenditure can have a great effect on the money you can commit to investing. They say every little helps when starting out. And all your investing should be made within a simple tax-free wrapper, such as stocks and shares ISA. So any profits and dividends you receive will be completely tax-free, and it will keep things simpler and easier to manage. There's no need for self-assessments. Now, there are loads of companies offering cheap and simple ISA platforms to help you start it, such as Interact Investor, You Invest, Trading 312, Free Trade, to name a few. Okay, you can set them up in a matter of minutes, but change your mindset when investing and record your portfolio on a regular basis. Let's just say each month, each quarter, or personally at the end of each year. Now I'm going to show you a simple chart of my personal stocks and shares ISA to show you how it's performed over the past few years. It's not to boast or brag, but it's to show some illustrations of key points about how our portfolio will build up over time. So let's look at the following chart. In 2018, our portfolio was worth £4,253. At the end of 2019, it was worth £17,483. In 2020, it was worth £22,960. In 2021, it was worth £57,723. And the end of last year, it was worth £71,352. Now, we did have a plan to get to this year of £94,000, but we're looking for an annual return of 10%. But with year to date, we've made 2.12%. So our portfolio is worth £84,991. Now, we've had some good years, we've had some bad years, but let's just say we've got an annual return of 10.81%. And that portfolio gives us annual dividends, let's just say £2,400 to £200 a month, and they will increase every year. But look at the simple graphic. It just goes to show if I can build a sizable portfolio, you can too, by taking steps, by actions, and investing regularly. And as I said, it did start out small, and any spare funds we have or money we have, we put into the funds, let's just say on an ad hoc basis. But through the power of compounding, you can see the portfolio is increasing year on year. We've had some good years, we've had some bad years, but the aim is to think long term. Now, we've received a return, as we said, 10.81% for the past 6 years. But the market normally gives an annual return of around about 7 to 8%. So we're doing better than expected, but the idea is think long term. Now, I'm going to include a second chart which shows the real compound of interest. And as I said, the first £100,000, as Charlie Munger once said, is what we call a bitch. After that, the rest is easy. But look at the following chart through the power of the beauty of compounding. Let's say we invested £10,000 each year. It would take us 7.84 years to reach the milestone of £100,000. Now, it's nearly 8 years. It may seem like a long time ago or in future, but let's just say investing should not be seen as a get-rich-quick scheme, but slow and boring, but you will reach your target. Now, look at the magic of compounding once this significant milestone is reached. It would only take 5.1 years to make your next £100,000. So let's just say a portfolio of 200,000. It will then take 3.8 years to reach another £100,000 or 300,000. It would then take another 3 years for £100,000, so we're now at £400,000, and then less than 3 years to reach 500,000, or the magical figure, shall we say, of £500,000. Okay, so look at the 8 years, they're increasing rapidly as the portfolio grows. It would then only take another 5 years to double your portfolio to reach £1 million. Now, obviously, the amount you save or invest is more important than your investment returns in the formative years. Now, this is a simple illustration, but remember to consider fees, charges each time you deal or make an investment. And obviously, if you invest more or you get a greater return, your investment targets will be reached in a quicker time frame. If you invest less or your investment returns are poor, it will obviously take you longer to achieve. But use the tools available. There are tons of free compound calculators on the websites, on the internet. Use a quick Google search, play around with the figures. Okay, so you can see the real returns of compound will take a dramatic effect when your portfolio reaches sizable value, but the actions you take in the early years will reward you greatly and massively in the later years. If you only take one thing from this video, is that everybody starts at zero in the same position as you. But keep hope, stay positive. As highlighted, you will have good months, you will have bad months, but avoid market noise, switch off short-term sentiment and think long-term. And remember to set yourself some personal goals and milestones and reward yourself when you reach a certain valuation or a target value. The journey should be enjoyable. It should not be a chore. But if you take the right steps, implement them, and create an action plan, you can achieve your financial goals and aspirations sometime in the future. Remember, if you like the videos, smash the like button, subscribe to the channel, and we'll see you again in the next video.